Once again, welcome to Bot Study Center. And today we are going to look at accounting equation. Yes, maybe you are there. I've been hearing accounting equation. Oh, you don't know how it is used in business. You don't know how to apply it. But today we are going to see how can you come up with accounting equation. Oh, and how do you use it in your business to know, maybe to know your assets, to know liabilities, to know owners capital, and other things. So before we continue, we are going to first look how can we come up with accounting equation. And now, like any other firm or any other business, when you are starting or when you want to start a business or a farm, you need resources. So here we have our business or our farm needs resources to start. Our farm needs resources to start business operations. Like for a business to operate or to start a business or what, you need some resources. At start, before starting that business, you need what? You need those resources. And remember, there is someone, you, the person who is going to start a business, or someone else. If that person comes and provides those resources, here we have owner provides resources. A farm needs resources to start a business operation or to start working. And the owner of that farm or the person who wants to own that farm or that business has provided with the resources. Now we have two items. A business needed resources and a business owner has provided those resources. So here we are going to have our resources needed. Our resources are resources needed to start a business. Is equal to start a business operations is equal to resources is equal to resources provided or resources supplied in a business. Yeah, a farm needs resources to start, like to start its operations, and the owner has provided those resources. It means we have two items. We have resources needed to start a business operations, which is equal to resources supplied in business, because those things are equal. We needed those resources and the person has provided. That means right now we have equal things. Business needed resources and the supplier has supplied. Now we have those resources in the business, but when those resources in business we consider them as assets. So here we have our amount supplied in the business, amount supplied, amount of resources supplied in the business, amount of resources supplied in a business, amount of resources supplied in business, when it reaches in a business, it is called assets. It is called assets. That's why you reach in a business, most especially auditors or what, they'll be asking which current assets do you have, which non-current assets do you have, which what. But remember, for you, you have your resources in business, but in business term it is called assets. What you have in a business, in our previous video about elements of financial statements, we talked about assets. If you have assets, if you sell them, you will get money. If you use them, you will get money. And they have types. You can go and watch that video about elements of financial assets. Yeah, so amount of resources supplied in business, we have said it is called assets. But remember, when those resources are provided, well, the actual resource, the resources, actual resources supplied in business they are called liability. They are called owner's equity. So we can call it equity. I call it equity. In short terms, when you have business, resources in business, it is considered as assets. Then, on the side of owner, or the person has brought in those resources, for him, he sees that things as capital. But remember, capital is under owner's equity, or it is under capital. It is under owner's equity. Yeah. So those resources, they are considered as owner's equity or capital. You can call it owner's equity or capital. In short, those resources in business, the person who brings in money into business, you see those things as capital. Then those resources in a business, for you see them as assets. Like for business, it has assets. Yes, but remember, we have said the business needed those resources to start its operation, and the person has provided, or the owner has provided those resources. It means we have assets. From our equation here, from this statement here, where we have said resources needed to start a business is equal to resources supplied in a business, and we have said resources needed to start a business, they are called assets in business. That means here we are going to have our assets. Our assets is equal to owner's equity or capital. Owner's equity. So this is our formula now. But remember, during operation, you will need suppliers, you will need third party. And it means when that third party comes in, or when they supply something, maybe you can say other people supplying business. When other people comes and supply business, maybe it can be in terms of giving them loan, maybe it can be in terms of giving them items to sell, or even or stock, or what, we shall come and call those people liabilities. We shall name them as liabilities. We shall name them as liabilities. So these are our liabilities, other people supplying business. But remember, we have said these are also other people supplying business. And when you check from our equation above, we have said assets, which is the same as resources needed to start a business, is equal to resources supplied in business. And we have said those resources supplied in business, one, we have owner's equity or capital, or the money the owner brought into the business. Also, we have other people supplying business. That means our assets is equal to resources supplied by owner, which is owner's equity, plus liabilities. Remember, what I have said, liabilities, it is people who are demanding business, so they have some cashier in business. Anytime you will pay them or you will clear them, but resulting from a previous or past thing, maybe they supplied you some things, maybe a business obtained some loan, so anytime we pay those liabilities. But remember, when you are going to pay those liabilities, you use your resources in a business, in which we have said they are assets. That means, that's why we say assets is equal to owner's equity or capital plus liability. Therefore, our accounting equation, we have assets is equal to liabilities. Assets is equal to owner's equity plus liabilities. But remember, assets, it is something that resulted from past events, but it will bring income or inflow into a business anytime. Maybe it can be selling them, maybe it can be using them. Then owner's equity, that one is the amount of money the owner of the business almost brings into a business. And liabilities resulted from past event, and anytime you have obligation to pay you as a business. So that's how we get our accounting equation. So this is our accounting equation. From where a farm needed resources, and the owner has provided resources. When they have reached the business will see those resources as assets, and the owner of the business, you see those assets in business as owner's equity or capital. That's why you hear someone saying, I have my capital. This house is my capital. This stock is my capital. This business is my capital. That means anytime you can get dividends from here, he can get share. He or she is a shareholder. So that's it. So this is our accounting equation. Our accounting equation is assets is equal to owner's equity plus liabilities. And then accounting equation, when we continue, accounting equation is also known as balance sheet, accounting equation is also known as balance sheet equation. Yeah, maybe the reason why it is called balance sheet equation, when you check all its components, assets, owner's equity, or liabilities, those are components of financial position. So you need financial position to do accounting equation. We need balance sheet components to do accounting equation. Then now we are going to define our accounting equation. Our accounting equation represents the relationship relationships our accounting equation represents relationships. Accounting equation represents relationship between a company's assets liabilities, and owner's equity or capital. Accounting equation represents relationship between companies' assets. It represents relationship between the company's assets, liabilities, and owner's equity. And of course, someone can be there who she wants to know, why do we prepare accounting equation? Why do we prepare, or why do we need Why do we need accounting equation in our businesses or in our day-to-day running of business? And we are going to look at some of the information. So why do we need accounting equation? We need to know why do we need accounting equation, or why do we prepare accounting equation. And there's one, it ensures accuracy. Ensures accuracy. Of course, when you prepare accounting equation in your business, it can be daily, it can be weekly, it can be monthly. Every time, if you get things which are not balancing, maybe there's some problem. That means accounting equation helps you, or it gives you information that maybe in your business, whatever it is running, it gives you accuracy. My assets, they are equal to capital, they are equal to owner's equity. That my assets can cover up liability and I remain with my capital. Yeah, that is accuracy. Anytime you can be accurate. Then the second one we have, it tracks financial position. As we have said, accounting equation, it is known as balance sheet. It is known as balance sheet equation. It means whatever you do in accounting equation, if they balance, it means you are tracking each and item in the balance sheet, because for accounting equation it involves all elements of financial position, CP assets, non-current assets, current assets, it may be intangible assets. When you talk about owner's equity, it involves those things of net profit, can involve current liabilities, non-current liabilities, can involve capital. So in short, every time you know what you have as elements of financial position, anytime, any day, as long as you are preparing accounting equation, you have information, your financial position, it is okay, or all items financial position. Then also have decision making. When you talk about decision making, this one is most common with business owners, or people bringing capital into business. Of course, you see, even those liabilities, or people who give out loans, when you go and apply for loan, they first ask you where you write, they first cross check, they do what it means. For them to decide or to make a decision, they need first see your information. And when you prepare accounting equation, all information is available, because we have said almost accounting equation, it covers almost big percentage of business. Almost everything in business, it is under financial position. So it will be easy for them to make a decision. Even you owner, you can be here, I have assets, these ones, you have this and this and this, and tell you it is very easy for you to go and make some decisions, maybe to add on capital or to do other things. So that is our accounting equation for today. And next time we are going to look at some of the examples or some of the illustrations on how we can do accounting equation, on how to apply accounting equation in real life.